Podcast. As you might have told lately, it has been super busy. We have been recording up at the Dublin Tech Summit. This year alone, we have recorded in New York, we've recorded in London, we've recorded in Dublin, we've recorded from the safety of my bedroom. And today I've got a very, very interesting conversation. I have Scott with me from Shuttle. Shuttle, basically, long story short, is I'm going to butcher this, but essentially VC funding for people who aren't traditionally VCs. Am I some way on the right track there?
Yeah, pretty close. We basically help busy professionals invest in venture capital opportunities, regardless of their network, knowledge, or net worth. So, really trying to open up the asset class to more and more people.
Cool. Okay, so I have obvious questions here to start with. I'm poor. I don't have much money. I'm not one of these people who's going to be, working in AIB, working in the bank. I think traditionally, when people hear funding and VC funding and investing, they automatically go, that's finance managers, that's big, sexy corporate companies, not that it's you and you can get involved. So I suppose the obvious place to start with this is, how did you start? What's the background in Shuttle? And give me the story.
Yeah, happy to. So it goes back quite a way. My co-founder and I have been best mates for the guts of 25 years. It must be coming on 30 years now. So dating ourselves quite a bit there. But we started investing together back in around 2015, just when crypto was starting to kick off. So made a bit of money within crypto, and that was our first real exposure to investing, and kind of kicked on from there. We started investing in more public market-facing things, stocks, bonds, ETFs, things like this. And naturally, the curiosity just grew and grew, and we wanted access to more and more things. And obviously, venture capital seemed like an exciting opportunity for us to get into. But again, it seemed like this is something that is restricted to the ultra-wealthy individuals and institutions of the world, which kind of rubbed us the wrong way a little bit. We felt like we should have access to this too. So we went about looking for options that we could get access to these type of investments. And there was a couple of options at the time. There was traditional crowdfunding, which is a well-known model. There's many companies out there doing this at the moment. But as far as our appetite as investors and the strategy we wanted to take, crowdfunding just didn't suit us. We felt that the incentives were just not misaligned on those platforms, where their revenues are derived from the number of investments they can have run through their platform. So within that, the quality of opportunities drops because they're trying to get as many investments through the platform as they can. So that just didn't align with what we wanted to get out of investing in capital. Then there was other platforms that give you access, but the minimums were like 50,000 euros. So immediately that was not accessible to us. So there was nothing available. So we just did a lot of research. We spoke to around 250, 300 people similar to ourselves who were working in tech, well paid, and wanted to get access to more investment opportunities. They've probably been investing in company stock purchase plans and public market investing as well. So people who have experienced this already, I don't think this is something that somebody who's never invested before probably wants to get involved in. It is a high risk asset class. But yeah, that was where our appetite began, and we validated that with lots of other people and figured this is something that we should go after because it's something that lots of people want access to. So that started off us on the journey of getting regulated by the Central Bank of Ireland.
Cool. To be honest with you, it makes a lot of sense to me because, as I mentioned to you before we jumped in, I'm in myself and my my partner here, Marty. We're both in the startup blend in our other outside of Goosed. And I've started crowdfunding recently, so it's very funny that you mentioned the big C word that early. Crowdfunding, man, it's hard. It is hard because what's happening is we're getting loads of views, we're getting loads of interactions, but what's happening then is we're getting loads of companies spamming us, kind of going, "Oh, we'll manage your crowdfunding for you here, but we'll take 15%." Yeah. But then what's happening on the crowdfunding site? You're getting lost in the midst of hundreds and thousands of shite, if we're going to be honest about it. And then the extra step is, as you kind of alluded to there, is for the person who's actually, putting their hand in their pocket and giving something over, they're kind of getting something like a thing or a stuff. It's like, here's a branded cap. And if you're asking people for money to invest, I suppose there's always that thing of what's in it for me, what do I get back from it? So this type of model where it's like you can invest smaller amounts over a longer period of time, and you're actually getting, obviously, like an equity stake, and you're going to get your return through. Now, obviously high risk, but that's the game of investments. So I suppose the question from that is, how hard was this to get involved? it doesn't sound like an easy thing to set up, right? Like, because as you kind of mentioned, Bank of Ireland regulations, you mentioned Central Bank of Ireland, you mentioned already. I'm like, how do you even go about when you're not someone with this background in finance and investments? How would you even figure this out?
Yeah, well, I mean, we had no clue from the start ourselves. We didn't think it was going to be this difficult with all the authorizations and everything like that. So obviously, as first time founders, there was a lot of naivety. We just saw an issue and we thought this is an issue worth solving, so let's go and do it. We thought we'd have an authorization within 3 months, but it turned out we worked on it for nearly 2 years. But it's a double-edged sword. I mean, as tough as it was, or as difficult as it was to learn everything that goes into getting authorized, that is actually the benefit of it. You learn so much just around governance, risk, compliance, running a regulated company, and financial services. So there's a huge amount of learning involved, which is like I love to learn about new things. So it was fun for me to a degree. There's obviously times when it was very difficult, but it was a lot of fun at the same time. So it's all just about learning, getting hands-on with the regulation, going through all the documents, and just discovering as much as you can, and trying to enjoy that process as much as you can. And it is enjoyable for the most part. But yeah, that was it. It was just trying to figure it out on our own, because we didn't have lots of money to pay a big law firm to do the entire thing ourselves, which is a good thing because we had to be hands-on and we had to learn it all ourselves. But yeah, it's just about digging in and doing the dirty work, the grind that needs to be done to get yourself to that position where you can actually operate.
The lovely founder's delusion, we'll call it, where it's like, I could do this, and then you hit the brick wall and go, ooh, there's a lot more underneath this iceberg. Because again, this is stuff we're seeing all the time. When we started, I was like, it's 3-4 months, we'll have a thing online on the Play Store, this, that, and the other. And then there came like anti-money laundering regulations. Then there became things like just legal stuff, and you're like, there's a lot more to this running a business thing than just let me press fucking publish and it's on and out there. So I suppose talk to me about this founder's journey you and your best mate have been on, because I feel that, because as I said, Marty's a good mate from this side, and then the football, it's my old boss from Carphone Warehouse 15 years ago who I do it with. So I feel I feel like it's a very similar trajectory where your two mates and then having to have these awkward conversations and difficult times. So like, I suppose take me through the founder's journey from like the day you sat down and went, fuck it, let's do this, to how you got to this point today where I can see now, because I'm on the website here, joining the waiting list, so we're nearly ready to pull the trigger.
The trigger's been pulled. So we launched last Christmas, just before last Christmas, and we've done 4 investments so far into 4 different VC-backed companies. But it's difficult to manage like liquidity on the platform. So you don't want lots of users coming in and not enough opportunities, because then some people come in and they'll be disappointed that there's nothing for them to invest in. So we still run a wait list just to manage that kind of liquidity within the platform, make sure everybody gets an allocation of the deals. But back to myself and my co-founder. So Rob was working at Salesforce. He worked there for the guts of a decade. He was selling into VC-backed tech companies. So he kind of had a bird's eye view of venture capital, and him and his colleagues would talk about these companies on the sales floor. How much are they raising? Their growing headcount, so on and so forth. So they became emotionally involved in these kind of companies, and they saw the exits happen when their exits did happen. So, for example, my co-founder, Rob, was working with a company called Workday, and he was selling into them, hoping to sign a new contract. They went quiet. Turns out they got acquired for some amount of billions, and that's where Rob was like, many monies. So it just got Rob thinking, how did the founders do? How did the employees do out of that? And why can't I get an opportunity to invest in companies like this? And on my side, I was working in London. I was working at a company called Unit 9. So we built consumer products and experiences for the likes of Apple's, Google's, Nike's, along with some VC-backed companies too. So I would build products for these companies, and then I would have to say goodbye to the products after a couple of months. So you become, again, emotionally invested in these products, and you've got to say goodbye to them. So eventually I was just like, oh, fuck this. I want to go and build my own products. And it just so happened that I had an interest in investing at the same time, and that led us to the wanting to get access to the private markets. So we came together, I think it was in 2021, early 2021. We were at a friend's house and just started speaking about what we were both thinking about. And it turned out we were thinking about similar things. So we just said, okay, let's try it out and see where it goes. We ended up spending we would spend 1 or 2 nights together at a cafe after work, after the kids had gone to bed. And we get together and just ideate on things and figure out where we were going with it. And 6 months of that, we went all in full time. And that was in 2022, early 2022. So we started building kind of like a version 1 of the platform. And I think back then, being first time founders again, we listened to a lot of advice, probably listened to everybody's advice who was willing to give us advice, and ended up listening to too much advice.
Yep.
And you just start to, feature creep happens within the product, and you start to build things that just really don't matter. You're just kind of building things. Oh, this sounds cool. This customer asked for this, so let's build this. And it's not really a good approach to take. Like, it's good to listen to advice, but you have to, have conviction in what you're trying to do and have a clear North Star about what you're trying to build. So we built all these different things for all these different people. We started generating revenue, but ultimately we came to a point where we got together and we said, this isn't going to work. We're not going to be able to scale this long term. It's just too difficult. There's too many stakeholders involved in this thing we're trying to build. So we need to figure this out. So we kind of got our heads together and made a small pivot. We dropped a lot of what we were building and just went all in on getting regulated from the Central Bank of Ireland. And that started in 2020, early 2022, I think. We spent 12 months drafting an application, which was a long time just to draft it. Because obviously it was just myself and Rob working on it. We worked with a law firm, but very in a minor way. So we would draft a huge amount of application and we'd submit it to them and they'd tell us it was crap. They'd send it back to us. We'd do it again. They'd tell us it was shit again. We'd send it back to them till a point where we got to a place where the application was.
Yeah, this is from man. You're talking familiar fucking territory to me. I feel this. I love this kind of vibe though, because it's like what I've definitely discovered over the last year or two is it's the advice thing. Everybody wants to give advice. Everybody's really happy to give advice. And what I've noticed is the founders that make it, the guys that kind of go, fuck it, that we're going somewhere, they're the ones who learn. And this is the thing, everybody has to learn this lesson. It's like not all advice is good advice. If you really believe in what you're building, you have to know when to have the firm spine and go, no, this is what we're doing. It seems like, as you said, going through that draft process, tedious, time-consuming, difficult, but worth it, right?
Yeah, 100% worth it. It was great. And we learned a lot, like I mentioned already, going through that process, but also it gave us time to build more relationships that were beneficial to what we were trying to build. So we spoke to a lot of VCs during that time, a lot of founders, just more customers, building up that wait list. So by the time we launched, we had opportunities ready to go. Some really exciting opportunities. The first investment we did was in Gentic, which is Sean Blanfield's new company that just launched a few months ago. So that was a really exciting investment to get into. It was really difficult to get into. We were trying to be kicked out by a VC a couple of times, but we managed to stay in the opportunity, thanks to Sean. But so all that time was beneficial. Like, we got to speak to so many people and learn so much during that time.
Yeah. So, right. I suppose let's get into the meat of it. Shuttle. I come to you guys as a business. I come to you as a customer. What happens? How does either on one side a company come to you and get like on board on the platform to say, right, drive investment to us, and how does someone like me as a customer come in and go, I've got some money, help me make it more money? What does this whole adventure and journey look like for someone? Yeah,
for sure. I'll go through the customer journey first of all. And Shuttle's a little bit different compared to any other platforms out there, just in terms of how we approach investing. So I'll walk you through what we're trying to achieve with that. So when a customer comes to our platform, they'll sign up, they'll register for their account, and then we'll ask them what they would like to invest on a quarterly basis. So that's anywhere from €250 per quarter. That's the minimum.
Sure.
And there's an annual fee for membership to the platform as well, which is €250. So they'll sign up, they'll deposit funds to their account, which is 250, anywhere up to 10,000. And on a quarterly basis, we'll source opportunities. So it might be 2 or 3 opportunities on a quarterly basis, and we group them together. The point of grouping them together is that with venture capital, you want to be investing as broad as you possibly can. Diversification is your best friend in this asset class.
Okay.
You want to be investing in as many companies as you can over a long period of time. So maybe you want to invest in 50 companies over 5 years to really diversify and give yourself a chance of getting into that one company or those two companies that are, really going to change the world, the Revoluts, the Stripes,
Yeah.
all those type of generational companies. So what we really try to push is diversification. So we group opportunities on a quarterly basis. So it could be 2 or 3 per quarter, and we'll invest your quarterly investment. It could be 250 equally between those opportunities we source. So it's not about picking and choosing what you think is the best. It's just about getting into as many as you possibly can quickly, and diversifying over a period of time. That's what's going to give you as the customer the best chance of not only seeing a good return on your investment, but also completely minimizing the downside risk. So at around 50 investments, your chance of losing money is 2.5%. So it's really low. If you're only investing in 5 to 10 companies, your chances of losing money are far greater. So
Yeah.
that is the high risk nature of this asset class. So you want to use the statistics in your favor, diversification in your favor, and invest over a long period of time to really give yourself the best chance of making a good return. So that's what we try to push on the platform, diversification. So by the quarterly investments, keep investing over a quarterly period over a number of years, and that's how it works for the customer. So it's very hands off. You'll upload your €250 per quarter. We'll present you with the opportunities on the quarterly basis. You'll see all the information you need to about those opportunities to make a decision. You can select yes or no to the group of opportunities on a quarterly basis too. So it's not as if you have to invest. You can invest if you don't want to, and then your money can be carried over, or you can add more money for the next quarterly investments if you wish to as well.
Gotcha.
For the customer side, I'm aware that was a lot of information I've just said. So
No. This is good. So basically, like the barrier to entry is actually very low, as you said. Like when you're trying to do it privately, a lot of these funds will go 50 grand is the baseline that you have to come in. Whereas like 250 a quarter sounds manageable, and 250 annual fee. So what's that? 1,250 in your first year.
Yeah.
Like it's not breaking the bank type money. And if you do top that up over the course of 3, 4, 5 years, you're looking at 5-6 grand in your kitty, and that's obviously going to grow over a 10+ year period. I assume this is the thing. This has to be a case of 10-year play kind of vibe. Am I going to be right in saying that?
Exactly. Yeah, it's like anywhere between 5 and 10 years. You might start to see returns after 5 years, but it won't be until 10 or 12 years that the real big winners, because it takes a long time for these companies to mature and become huge. Like just look at Stripe. Like how long have they been around? I think they were incorporated back in 2009 or 2010, maybe. So
yeah. No, they're actually from only out the road here, the two boys. I'm Limerick based, and they obviously started that when they were in school in Castletroy, which is literally the next step on the motorway junction out the road.
Yeah,
it's almost like Limerick does things, but nobody ever hears about it.
But
that's a personal gripe that I'll whinge about another time. But no, like I get it with these kind of financial products. Like Stripe is worth billions now. The two boys own actually very, very little of their own company anymore. But like, I'd rather own 3 to 5% of a company that's worth that kind of money than own 60-70% of a company that's got no money. So
yeah. I mean, of course, there's two sides to that story as well. Like, not all companies work out. In fact, a lot of them don't work out. So, going the venture backed route isn't always the best option. Depends on your company. But yeah, like I said, those massive outcomes take a long time to kind of realize. So this is a long-term game.
Yeah, and it sounds like it's very from like the consumer standpoint. Like so, like this is like what I like about this is like it can be any of my mates will say who are working, the factory gigs. It could be any of my mates that are involved in like teaching, sports coaching. It's like if you've got 250, 500 euro disposable income every quarter, like that's realistically you're looking at. Are you putting aside 100 quid a month? If you're putting 100 quid a month aside and you come to you every quarter, put that in. That's a case of going, right, we're going to diversify your portfolio, and suddenly you have a portfolio. You know what I mean?
Yeah. It'll be new for a lot of people, but I think it's an exciting space to be in, because you can feel like you can have an impact on what the future of companies are looking like in the world, especially now with the advancements of AI. There's a lot of really exciting things being built at the moment. So to have a seat kind of at the ground floor and be involved and see how those companies are growing over time is really exciting, because you don't have access to this. If you invest in an ETF in the public markets, like you just invest and that's it. Like you might look at the updates, but it's all quite boring. You're just doing
That's it. Yeah, you're looking at a chart.
Yeah. So with this, it's quite exciting to get involved on the ground floor. And I think like back to the point with companies taking so long to mature, and there being fewer and fewer IPOs these days. Like just look at Stripe; it's 90 billion valuation. It's still a private company. 20 years ago, Google would have IPO'd at a 600 million valuation. So less and less companies are IPOing these days, and when they do IPO, they are worth so much more. So all the kind of upside that was available in public markets is decreasing rapidly.
Sure.
So to be able to invest in the private market side of things before all the upside is taken away by the ultra wealthy investors and the institutions is a net positive for investors. Now, obviously, there's more risks involved. There's less information, but if you work with a trusted platform or trusted partners, then
you guys,
there's hopefully, we've gone through a lot to kind of instill trust with our customers. We've gone through the regulatory process, so transparency and trust and simplicity are three of our core values, and something we're keen to really hone in on over the next decade.
Makes a lot of sense. All right, let's go. It's like I think it's cool because obviously, like if I come to you guys, I'll be like, "Here's some money. Go, please help me make more money eventually." And it's an eventual play. Like anybody who's coming into this thinking it's going to be a tomorrow job is, go just leave it in a savings account or go play the crypto slot, the crypto slot machine, as I'll call it. It's not that. Like, but from a company standpoint, right? So, are all your companies that you are getting investments for? Are they all Irish based? The international? Talk to me about the company process. So let's say I bring my funny little fancy football game to you and go, right, time to go and get investors. What happens?
Yeah, so there's a couple of ways that it happens with us. The way it happens mostly, how it's happened so far, is through relationships with VCs. So there might be a company that's raising 2 million, and the VC is leading that round and setting the terms for that round, which basically means they're kind of deciding the valuation, deciding what terms there are in terms of what happens when people vote on use their voting rights and stuff like this. So they will set the terms of the round. They'll invest 1 million of the 2 billion, and they'll come to us and say, "Hey, we're investing in X company. We're investing 1 million. Would you guys like to come in for 250,000?" And that's how we've done it to date, where there's a relationship with a VC. But companies have come to us, and there's like a form where they can upload their information, and we kind of just analyze that and ask them a few questions. But what's critical for us is that there is an institutional investor leading that round. We don't want to invest in rounds where there isn't kind of another layer of due diligence happening beyond our own. And I think that's really important because myself and Rob, as you know, we don't come from the financial background.
Sure.
So we are not experts in evaluating companies. We do as much as we can, and we've built technology and everything to help us evaluate companies. But with our platform, if we want to kind of going on to that trust value as well, we need to invest with people who have experience doing this, people who have a track record of selecting great companies, and they've done it before. They know what looks good. They know what doesn't look good. They know what red flags to look out for. So we always co-invest with an institutional lead investor. So that gives us comfort, but it also gives our customers comfort, knowing that there is multiple layers of due diligence happening beyond our own. And in each investment we've made so far, there's been at least 3 other institutional investors coming in. So a lot of layers of due diligence happening. So a lot of people looking at these companies and saying, yes, this is a company worth investment. So again, it's just comfort for us, comfort for our customers.
It makes sense. So if you see a Shore Valley, if you see an Elkstone, a Hibernia, if you see iBeam or any of these kind of the big 4 or 5 known houses attached to it, you kind of go, all right, well, their house in order, and if they're taking a seat at the table, we can trust that this is somebody.
Yeah.
So I assume then you don't look at companies in their pre-seed stage. It's normally Series A, Series B, slightly further down the track.
It's anywhere between pre-seed and Series A. We haven't done a Series A yet. We've done a couple of pre-seeds and a couple of seeds, and like pre-seed and seed, the lines are blurred between what is pre-seed and what is seed.
Yeah, Joe, actually, let's get into that a bit, because I think like that's just good for a lot of people listening. That's just going to be words. Like, what's a pre-seed? It's like pre-seed is before the company's making money. Like, do you know what I mean?
Yeah, well, I mean, again, it's very subjective. It depends who's looking at the round. I think how I would classify it is a pre-seed is when you raise your first round of institutional funding. Like anything before that, I would just consider an angel round. So you've just got angel investors in. I just call it an angel round, friends and family as well, if you're so lucky. But then obviously, pre-seed is when the first institutional investor comes in, and you're probably very early signs of revenue, or you've got no revenue. Anywhere beyond that, where if you're like, even if you've not raised institutional funding before, if you're making a lot of revenue and you've bootstrapped up until that point, which you're well within, revenue generating at this point, that might be a seed stage company. But pre-seed, first institutional investor, limited or no funding, a little bit of traction, whether it's like wait lists or revenue or LOIs, whatever that might be. And then seed is kind of, you're generating more serious revenues now. And you are bringing more institutional investors into the round. And then obviously Series A is much more financially driven, where you start looking at the financials and how you've been performing, what the next few years are looking like. It becomes much more financial than data driven.
Gotcha. Well, that makes it makes a lot of sense. So basically, I'll just use like this Goosed as a website. Like if we come to it, it's very much a case of there ain't nobody backing on you. We're a media site. Like you'd automatically, that would flag up something. Go no, which is good. It means you're not getting like a Kickstarter, like an Indiegogo. You're not getting reams and reams of shite through the door that you have to filter through. And
you want to avoid as much as possible, because it can get overwhelming. But at the same time, you don't want to miss opportunities. So we'll never just look at a company and say, oh, just because you don't have an institutional lead, like we're not going to have a look and we're not going to talk to you. Like if we look at the company and the founders seem really credible and the idea seems good, then we're going to talk and we'll try and help you find that lead down the line. Because if we find it exciting, then we want to share it with people or share it with VCs that we co-invest with and see if they find it exciting. And if we can help you find a lead for your round, that's amazing. Then it's great for us in a couple of ways. We found a new investment for our customers, but also we've proven our value to VCs that we're co-investing with. It's not just about us taking, it's about, hey, we've got this cool opportunity, you guys could invest in them too. So it's all relationships in this game, and building relationships with the right folks and being good founders.
Fascinating. I find certain things like this fascinating because it's obviously very much like as you said, like you build the tech, you build the tech, and even though there's a real heavy tech element to this, it's like there's an offline online kind of piece. So even though there's the heavy side in the technology, you still need these personal relations. And I think this is something that am I going to go on to this rant? Yeah, probably will. I find something that over the last year to 18 months with the AI push, like I love AI. It's a wonderful tool. I will call it a tool. It's not a fucking replacement for anything. But what I've definitely found is that there's some people who want to rely on it so heavily that they forget that there's a person the other side of a message, that there's like if I showed like a LinkedIn inbox or an Instagram inbox, does anybody write your own messages anymore? Are you just getting getting ChatGPT to do it for you? And it's this personal dynamic that actually, the technology stacks, like the product works, but how are me and you going to work together? And it's like, if I'm just copying and pasting the ChatGPT and you're doing the same thing here, do we just let the computer talk and let's not, or what are we doing?
I completely agree. Like it's gotten out of control on LinkedIn anyway. The comments are the worst. People who comment on things through a bot, and it's just so obvious that it's happening. And they're like, it's just laziness, I think.
We should connect.
It's annoying. And I think I agree completely. Like AI is going to be an amplifier for how people interact with each other. Not a complete replacement. And it's really exciting. But it's a funny time in AI at the moment, with everybody just getting so excited about it and kind of going all in on it, and just the amount of AI that's being used when it doesn't really need to be used, or it shouldn't be used. It's I think it'll be it's going to continue for a while, but hopefully people start to
reminds me, and you probably might be a very good person to talk about this. It kind of reminds me of like the early 2020 boom around crypto, where it was like, it was all crypto bro culture and stuff for this, and the market dropped and then it picked up again, and it's like, is crypto coming back? I don't like. It's probably just Bitcoin now, realistically, from everything I'm seeing and hearing online. it's like an AI is probably going to do the same thing where it's going to dip and then it'll come back, but it'll come back to a point where I think we've worked out the shite, we've worked out the kinks. It's the same thing. We could have made, like, I regret not chasing the crypto bubble when it was there, because it would have been a great chance to make a quick buck. But like, yeah, I don't know.
Yeah, well, I think all new advancements in technology follow the same curve. There's this initial hysteria about everything, it's going to change the world, and then the bubble pops and you go down, but then it starts to level out and things get more and more useful. And I think when people don't realize they're using AI is when AI will be working. And it's the same for crypto. It's when people don't even realize they're interacting with crypto networks that's when it becomes truly useful and a real use case.
Yeah.
And I think it will get there. But I think that it's getting there slowly, but it's not quite there yet.
No, yeah, 100%. Because, like, I don't know, like, one of my friends got reeled down the rabbit hole with NFTs, lost his whole on that. Like, he is so much. I think this is a human behavior thing that I think is fascinating for business that I see, and like, especially like a business like this. It's like you've got people who've lost their whole before on oh yeah, I bought Dogecoin, or I jumped on the NFT train and I lost 10 grand. And it's like,
it's the wild, like, crypto is the wild west. It was like, it helped us fund this business. So we were lucky in that regard. We got in it very early, and it literally kept us alive for the last kind of number of years. It's all gone now, sadly, but it got us to this point. But I think with crypto, it's just such a wild west, and there isn't that regulation. It's becoming more regulated now, obviously, with the introduction of MiCAR and all these other frameworks, which is a great thing. I think it's a really good thing. But yeah, people just lost their minds with it, and I got too carried away. There wasn't any education around their people and how you should approach crypto, and platforms themselves didn't put in any safeguards or guardrails to stop people from losing their hats when they come onto these platforms, and didn't really know what they were doing. So that's a massive thing with us, education, and we have a lot of things, like both regulatory and of our own initiative, that are on the platform that prevent people from doing things they shouldn't be doing. Setting maximum investment amounts and lots of risk warnings and information and educational resources. So I think it's really important. Like, it's the same thing with us as it was with crypto. Like, this is a new asset class that people just don't know too much about.
Yeah.
So people need to be educated, and people need to have their hand held when they're coming into something new like this. So otherwise it can be confusing and it can scare them away, or they'll go too far and invest too much money. So you don't want either of those situations. So
yeah,
it's a balance you've got to find.
But I think that's what makes this kind of thing cool. It's like, if you're the type of person who's been burnt before, if you're the type of person who actively wants to invest and try grow like your own personal wealth, or try to make, like, because, like, as we all know, like, savings account is worth nowadays. So, like, you want to try to find ways of making your money work for you, which is why people go and research crypto. It's why people jumped on that NFT train, because they were like, oh, I'll make it 10 grand fast from a picture of a monkey. You won't. It doesn't work like that. Please don't do it. But, like, this is where a platform like Shuttle, then essentially, it's like, or instead of going, like, rolling a digital dice and throwing your money in the internet on a hope and a prayer, here, come talk to us. We have actual businesses here that are being backed by proper big funds, and we will help guide you down the right track. And right there.
Yeah, exactly. That's exactly what we want to do. And not to say that you shouldn't be investing in crypto. Like, it's fun, and if you do it responsibly, then it can be really, beneficial, and it can be rewarding, and it can be great. But it's just about, being aware of the risks, and having not everything. Like, we don't want people to invest all their money through Shuttle. Like, we should only take up a small percentage of your overall portfolio, like 10 or 20%.
Yes.
But the percentage number isn't important. It's just that it should be a small percentage, and you should be aware of the risks, and you should try and educate yourself, whether it's investing through Shuttle, or whether it's investing in crypto, whether it's investing in public markets. It's all about educating yourself to the risks and the rewards, and just going in eyes wide open to anything you are going to be investing in. Because, like you said, it is becoming more and more popular, investing. Like, in Ireland especially, like, we come from a culture of not investing at all, and for a number of reasons, a couple of very obvious ones.
Don't take my stuff.
But we've just been exposed
before.
Say again.
It's almost like that has happened before. It's like, oh,
Yes, yeah. But we're coming around to the idea of investing, and I
yeah,
think it's becoming more and more popular. It's just getting so much easier with the Revolut being able to invest in stocks through Revolut,
yeah.
Gyro, and then obviously crypto had a big impact on the culture of investing. It just made it seem more accessible to a lot of people.
Mm.
Like myself and Rob, my co-founder, we got more curious about other things. So I think the culture of investing in Ireland and globally is really exploding at the moment. So it's important.
You definitely said something interesting there. You mentioned Revolut. I think that's where I did my first crypto buy and my first stock buy, because I wouldn't have actually had a notion of where to do it beforehand. I know now I could have gone down to my local AIB branch and talked to my bank manager, or I could have gone, to the AIB from TSB. And I think there's this perception that the traditional banks gatekept this. They didn't. You just had to know who to ask and what you're talking about. Most of us don't. So I think Revolut are a major player in terms of having broke down that mental barrier for people. And now when you have that little chart on the app and you see where it was 6 months ago and now, people are I think Revolut have a huge thing to to say in how people's mindsets have changed towards it.
Yeah.
Which is great, because someone has obviously trotted a very different path to what you're doing, but you're able to take an example of an avenue of what they did and go, right, we're going to do that to the absolute maximum and do it properly and do it right and actually create portfolios for people rather than just letting them make all their own decisions themselves. We're going to guide them.
Yeah, exactly. It's all about guidance and making sure people are educating themselves, making the right decisions, and if they do that, then you're just going to have more fun at the end of the day. It's just going to be a more rewarding experience if you know exactly what you're putting your money into. It's just going to be better.
Cool. So talk to me about where Shuttle is, where you're at right now. Kind of what's the we're going to, where are we going to be this time next year? Where are we going to be at this time 5 years? Give me that whole, what's the plan for Shuttle for where we are now? What are we up to now? And kind of what's our, I suppose, medium and long term kind of plays here? What's our joy?
Sure. So I mentioned earlier we launched in December. We've invested into 4 different VC backed companies, and we just closed our 4th there into a company called Lemon, which was really exciting. And we'll be doing another, we call them drops. So whenever we have a group of opportunities available, it's called a drop. We're looking for our next drop to go live end of this month. So we're kind of finalizing things with that now, and that'll kick on for the next kind of couple of years. What we want to be doing at the moment, we do direct investments into startup companies, but where we'd like to go to next is helping people invest into VC funds and potentially into private equity as well. That'll lead us down a path of more regulation. So that's kind of more of a 2-year play.
Sure.
And then, ultimately, we think over the next decade, there's going to be a kind of a rapid adoption of private market opportunities. Retail investors are going to be allocating a lot of money to these asset classes over the next decade as access begins to expand and more people have availability to it. But as it stands right now, there's not really any infrastructure that enables that to happen. It's all built in public markets, and all the trading platforms are all built and they exist. But in private markets, it's much more opaque. It's much more very separate processes with different firms, different funds. So there's not really kind of one player building the infrastructure layer. There is a couple of players starting that process, but we feel like if this is going to become a big asset class where retail investors have the ability to invest into these assets at scale, there needs to be somebody building the infrastructure that enables that to happen at scale. So that's what we're going to be doing. We're going to be building that infrastructure that enables retail investors and fund managers to collaborate together. So a fund might want to raise, 10 million, and they would like to raise some of that through retail investors. They don't want to be having 1,000 or 2,000 investors coming into their fund. That would just be way too much headache. So what we want to build is the ability for us to kind of pool all those investors together and have them invest in the fund as just a single entity. And we'll, as Shuttle, will handle all the administrative work that comes with managing those 2,000 investors. So just making it really easy for fund managers in private markets to accept capital from retail investors. So solving the problem for both ends of the spectrum, the fund manager and the retail investor. So that's what we'll be working towards over the next kind of 3 to 4 years. And then, 5, 6, 7 years from now, we'd like to see ourselves as kind of the de facto private market investment platform within Europe, possibly beyond as well.
Possibly beyond. No, do you know what? I think this is really cool. Like that piece that you said there, it's like that you pull it all together and do the admin work is like a really big piece of this puzzle. Because as you said, like a lot of, as you mentioned at the start, like 50,000 is kind of the entry fee. Now I don't have that, my mates don't have it, but between 15, 20, 100 people, that money's probably there in a pool and a pot. But VC's not going to go, right, well, you're getting 0.25%, you're getting 1%, you're getting 5%. You take obviously that admin over and going to go, right, here VC, here company, here's your wedge of money, we'll deal with who gets what later. We know who gets what because it's all joined up.
Yeah, exactly. It's all about simplicity. How can we make it as simple as possible for everybody within the transaction?
Very like that. It's actually really simple. I thought, like, I'm not going to lie to you. I was coming into this going, oh, this is going to be one now where I'm going to have to do mental gymnastics because this is finance and my background is in marketing and I love spending money, not saving money. This is the marketer's problem. You've honestly made it sound really simple where I just rock on, hand you some money and go, here, help.
Yeah, I mean, like at the end of the day, it is quite simple. I mean, there's a lot of complex things that happen on the back end that we need to deal with in terms of money flows and customer due diligence and, just a lot of things that are quite complicated, but we abstract all that away. So you don't need to worry about any of that. For you as a customer on the platform, it's just a couple of clicks and you're investing. So that's the user experience we want to retain as long as we possibly can. Mm-hmm. Obviously, things start to get more complicated, but it should always happen within a few clicks, and only the relevant information should be available to customers up front that they really need to know, the really critical stuff. They can drill down into more complicated things if they want to, but for the most part, we want to keep it as simple as we possibly can.
Yeah, no, I love your website. To be honest, I've been on the website this morning. The website very much feels almost like a shopping experience. It doesn't feel like when you're going onto it, it's a clunky. Oh Jesus! Like the AIB app might be the worst thing I've ever seen. The Bank of Ireland site might be one of the worst websites I've ever seen. A lot of these financial institutions, they're running off technology that's designed in the mid-90s and they don't want to invest the money to rebrand everything. Your website is it just looks like, here, click the thing, do the thing. Oh my days, that's it. It's a very simple dashboard. Like it's
what consumers expect these days. Like when you've got the likes of Revolut who just make investing so simple. Like a customer doesn't come to us and think, oh, these guys are an early stage company, I'll let them have a few mistakes and bugs here and there. They're thinking the same, like this has to be as good as a Revolut or whatever else, whatever other investing platform they're using. So there's no minimum viable product within consumer finance. It has to work really well. It has to be simple.
I never
anything less
than Jesus. I didn't think about that side. Oh wow, yeah. Like we were able to go out with a dirty app next. Well, no, I'm saying dirty app. I'm undershooting it massively. It's gorgeous, but we can go out with an MVP where it doesn't have every single feature under the sun. We were holding back a bunch of stuff for 2-3 years. You don't have that in the screening. Oh my days! All the background stuff that must have to happen to get to that point.
Yeah.
Fuck.
It's a lot of fun.
Imagine. Jesus Christ.
So there's a lot, but we try to make it as easy as possible. But yeah, there's a lot of things that customers will have to do, but we put a lot of work into our platform, the user experience, the user interface, and it's probably the 10th version of our website. And no doubt we'll look at this website in a year from now and be like, what the fuck were we thinking? This is a terrible looking website. But I think it's at a point now where it's good enough. There's no bugs, no major bugs. There's always a few bugs, but no major bugs, and everything runs pretty smoothly at the moment now. There's obviously going to be more product features that we launch, into the future. It's very simple. It's a very, very there's just kind of one product offering at the moment, which is investing directly into private companies that are, VC backed. But that's going to expand, and we're going to add more products, and we'd like to add kind of savings features to the platform eventually, where any money that you're not using that is sitting on the platform, is going to earn interest either through a money market fund or through a banking partner, because you don't want money to just be sitting there when it could be earning interest.
So are your competitors like the actual banks themselves? Like just out of curiosity, like is it the banks we're competing against? Is it VC
No,
funds? Are we friends with both of these? Like,
well, there's an argument for both. Like we compete with VC funds in the sense that we're both competing for the same allocation in these exciting companies, but at the same time we're collaborating with the VC funds where they're sharing allocations with us at the same time. So
gosh,
sometimes it's competitive, sometimes it's collaborative. It all depends on any individual investment. We don't really compete with banks, not yet anyway.
yeah.
Maybe in the
No, just
future,
when
but
you
for
mentioned
now,
the savings thing, I was like, ooh, does that mean we're going down the banking regulation? Does that mean we're going to go start looking at competing with N26 and Revolut and the traditional banks and stuff?
yeah. Well, I wouldn't say we compete because people want to invest, and they want to invest easily. They want it to be automated. So they want to say, I want to invest €2,000 per quarter into Shuttle. That'll come into our account. And if we can have it so it's not just sitting there, depreciating, we can have, kind of interest being earned on those funds, then it's a win-win for everybody. Like we're
Yes,
not taking money away from the banks because they're going to invest it through Shuttle anyway. But if there's a way to earn interest on that money for the customer, then that'll be fantastic.
that makes so much sense. That makes so much sense. Like, I don't think I have necessarily any more questions to say. Like, this has actually been really, like, this is fascinating to me. If I had any money, I'd be ringing you tomorrow. And to be honest, if I wasn't in the midst of startup land, I'd literally be on to you tomorrow going, because I have thrown money away on stupid things. But before I left my previous job, I bought a business in the UK,
Okay.
which tanked after 6 months due to some legal stuff that we didn't foresee in the due diligences and stuff. Look, lesson learned.
They'll get you.
Lesson learned. But looking back now, and I've been saying it for about a year, screaming into my pillows, going, I should have put that money somewhere and done something smart with it rather than doing something stupid, going, oh, I'll double my money in a year.
Yeah.
No.
Oh, it's the beauty of hindsight, isn't it?
Yeah. Yeah. But like, I don't have any other questions for the moment. Is there anything that we haven't touched on that you think we should mention?
No, I don't think so. Yeah, not that comes to mind anyway.
Cool. So I suppose if people want to get in touch with Shuttle, whether they're a company that wants to look at onboarding, whether they're a client who wants to save money, how do they reach out to the company? How do they reach out to you? Give me that whole elevator 30 seconds.
Yeah,
The whole jazz hands.
no big elevator pitch to it. Like myself and my co-founder are very accessible. Just reach out to us on LinkedIn. There's obviously shuttle.club where you can find all the information there. Our emails, my email is scott@shuttle.club. So anybody can feel free to email me, talk to me. I'm happy to jump on a call with anybody, give you more information. So yeah, we're both very accessible. We like to talk to people.
Cool. Yeah, so look, I suppose I'm going to do the big sell here. If you are a company that is trying to raise money, if you're already talking to a VC, I would have a look at Shuttle Club. If you're someone like probably myself a year ago who has a little bit of money that's in a savings account, not making a whole lot of money, do you know what? You could probably invest it with a bit of help, right? So head over to Shuttle.club, do the thing, talk to the guys, create an account, join the waiting list, do all the bits and pieces. I'm really excited to see where like a product like this coming from Ireland actually can go, because as you mentioned, we're going from a place where 10 years ago nobody wanted to invest in anything to a place where it's like, oh yeah, we should probably do this. So I'm really excited to see where you go. From our side, look, we're on all of the social media channels apart from X. We're Goosed_.ie everywhere. We're on TikTok, Facebook, Instagram, YouTube, Spotify. Where basically, if you have a podcast, if you want tech news, we exist somewhere on the internet. So look, Scott, really appreciate you joining me today. This has been really, really interesting. So thanks a lot.
Thank you, John. Thanks for having me. Appreciate it. Fun chat.
No worries. And to anybody that listened today, good night, good morning, goodbye, good evening. I don't know, whenever the hell you listen to it. We'll see you on the next one. Bye.
Bye-bye.